Hello, this is a Tradesight trade recap. I wanted to walk you guys through a trade setup that we mentioned in our trading lab on Thursday morning. That's Thursday, November 13th, 2014, using two of our trading tools that we teach in our revised futures program. And one of these tools is what we call an opening range bar tool, and one of them is our Comer tool, which is a tool we've been teaching for a long time. We're going to start with the opening range bar tool, and then we'll show you how the Comer tool can be applied to help you maximize the exit on a specific trade. So here's a look at the NASDAQ futures. This is the NQs. Thursday morning, these are 1-minute bars. So this is the opening bar that you see of the day so far, and I'm going to walk you through the trading day using bar replay mode here in eSignal, which allows us to relive the session. So what we do on an opening range play is our tool will mark off the high and low of the first 2 minutes of trading. So here is the first 2 minutes of trading completed, the first two 1-minute bars, and you can see the high and the low are the orange lines. That's 4,204.25 up top, 4,199.75 on the bottom. So what we're doing from here is we're going to look for a close on a 1-minute candle basis outside, either above or below these lines. Now what you'll notice is that the third bar was inside of that, and you're going to start to see some shading here. So it's going to shade the area between the two orange lines so we can see clearly when we break out of it. So here's another bar. That's 4 minutes in, we're still inside the two lines. Here's 5 minutes in, we're still inside the two lines. And this is when we pointed out that the opening range was breaking here. With 6 minutes into the day, we finally got a close above the opening range high, which is 4204.25. So what we do is now we go out and we buy the NQs, and we're going to put a stop underneath the low of that opening range. So underneath 41.99.75. So we're entering the trade long with a stop under the low of the opening range. Okay, now keep in mind this puts us in around 4206. We'll just mark it, round it off there. Let's watch how it plays out in 1-minute bars. Now, we teach how to take partials along the way, but what I really want to do from here is measure for you the ultimate exit on the trade. And now you see some numbers on the charts, and what those are is our Comer tool. And we've got 1 through 9 in green numbers, and that is the startup phase. That gives us a certain amount of energy in the market. And once that's completed, as it already was, you can see the 1 through 9, then it gives us a new countdown phase, which is looking for exhaustion in the market, and that's the pink or magenta numbers that you see currently at bar 7. When we get to a 13 using that, that would be our ultimate exit point if we can get that far. Would represent exhaustion on a 1-minute time frame that the market has moved. So there's bar number 8. This is going to be 9. And you're going to hear a sound when I do get to 13 because we do get there. But look at this. We're already at this point in time from our 4206 entry. We're 12 points. 12 points, or if you go by 4 ticks per point, 48 ticks in the money on the NQs. And here's bar 11. And no new counts here. Now, this is what's interesting. Because we had so much energy, we actually got a new 9-bar startup phase, which erases the pink or the magenta countdown phase. So it recycles it. It's what we call a recycle, meaning we're kind of starting over looking for the exhaustion signal in that marketplace. So here we go again. Now we're sitting at bar 5, kind of pause for a few minutes, and as we start to make new highs, there's bar 6. You're going to need new highs each time to get a new numeric count. So here we are at 8, 9, still holding, 10, 11. Okay, now keep in mind at this point in time, we are almost 20 points in the money on the NQs. It's almost 80 ticks if you go by the 4 ticks per point breakdown that the NQs are. If you go by the old 2 ticks per point, which is what the NQs used to be, you're still sitting 40 ticks in the money. There's bar 12. There's bar 13. There's our sell from an exhaustion perspective. Okay, so if that gives us the ultimate exit, even if you just take it off right here, you basically made almost about 20 points on the trade on the NQs from our opening range play entry to our Comer exhaustion signal on a 1-minute time frame. And then just to show you the importance of this signal, let's take a look real quick here at what happens after. You can see the pink line that appears near the top there. That's our risk line from that sell signal. That would be if for someone who took a reversal here, for someone who shorted the market, their stop would go above that pink line. Let's see how that worked out if they did take not only and sold the position, but reversed it and went short. And here we go. all the way back to that red line, which is the static trend line. That should be the target from a 13 sell signal, is to take you back to that point. So again, the opening range play gave you the long entry. The Comer 13 exhaustion signal gave you the sell entry. And if you reverse that, the red static trend line became the target of that move. You could have made 20 points both ways on the NQs using the signals. This is Chris from Tradesight. This has been a Tradesight trade recap.